So, welcome everyone. Thank you so much for giving us a little bit of your time today so we could talk about Cereus Real Estate. This is something that Jordan and I have been working on for a little while, and we're really glad to bring it to y'all now. I think most of us are familiar with each other, but we thought we would just take a few moments to just formally introduce ourselves. My name is Daniel Shin. I'm a urologic surgeon by training, and over the past 5 or 6 years, I've become increasingly obsessed with real estate investing as a means of generating financial freedom and wealth growth. And a large part of my life now is real estate investing. I still practice as a locum tenens urologist, but it's sort of a part-time component of my greater life, which is also encompassed by the Darwinian Doctor blog and now Cereus Real Estate. So I'm really happy to be here with you all to talk about it.
Yeah, and I'm Jordan Frey. I am still full-time physician. I'm a plastic surgeon in Buffalo, New York. I'm about 4 years out of training. Um, and as I came out of training, I started a blog called The Prudent Plastic Surgeon. And through that, I learned about real estate myself and then started investing with my wife, who we now have. I'm just letting some other people in, sorry. We have 8 properties in the Buffalo, Western New York area, and we've really enjoyed it. And so this is also how I met Daniel through our blogs and through real estate investing, and we kind of learned together and grew together. And so this just kind of became the next step that we felt like we could kind of expand and help others. So we're really excited for this.
Yeah, I didn't mention it, but I live in Memphis, Tennessee. I was in Los Angeles for over a decade, but I recently moved to Memphis. And the uh, the trend in our portfolios, actually, Jordan and my portfolio has been multifamily. And I sort of utilize the stack method to grow from single family to duplexes to small apartment buildings. And increasingly, we saw the value of apartment buildings in our portfolio. So what is Serious Real Estate? Basically, Cereus Real Estate is a company that is focused on the purchase and development of multifamily real estate, utilizing pooled investment in the form of syndications. And why did we start Cereus Real Estate? Do you want to take this one, Jordan?
Yeah. So obviously the one of the biggest is the investor benefits. And we have been investors ourselves, and we talk a lot about active investing on our site. The one piece of feedback, not even feedback, but just response that we get oftentimes is, listen, I think this is fantastic. I'd love to get involved in real estate, but I know myself, I'm not going to invest in real estate directly, meaning I'm not going to buy it and own it and manage it, etc. The way that Daniel and I have. And what else can I do? Is there another way that, you can help me? And so this model that we're talking about is really a passive model. I always kind of say it, nothing's 100% passive. The upfront work in terms of the investor is vetting those who are sponsoring the deal, which in this case would be myself and Daniel. But once you sign on, it's passive. You're not worried about collecting the rent. You're not worried about repairs. You're not worried about, an exit strategy, etc. That's all the stuff that we worry about, and because we kind of enjoy worrying about it, like that's um, a hobby of ours, something that we enjoy. So we're able to offer this up as a more passive alternative. And we've also seen just how much this real estate has accelerated our wealth growth compared to the kind of traditional wealth building models, which are certainly still tenable and will reach financial freedom, but the kind of like save 20%, invest in index funds. I still invest in index funds, but I've seen the real estate portion just really outgrow that. And that's now it's been interesting because that's been in both a real estate market that was very favorable for investors and then a real estate market that was very unfavorable for investors. And I think that's important that we've kind of seen both of those cycles and um, you know, been able to manage really successfully the real estate investments through that. Um, and then obviously the ultimate goal is financial freedom, that passive income that allows us to work because we want to, not because we have to. And that's the great thing about real estate. And so that's been able to replace a large chunk of my clinical income. Daniel, a huge chunk to where he's been able to scale back basically as much as he's wanted. And this is where ultimately that we're headed to provide a passive opportunity for this passive income to allow for financial freedom.
Nice. And I think that it's important for us to think about the societal impact and benefits of real estate investing as well. And I think real estate investing gets a bad rap because of the housing shortage in our country. But the bottom line is that the way that we invest in real estate helps improve and increase the housing supply. Generally, what we're going to be doing is taking properties that need a bit of TLC, and we're going to be pumping in capital to make those housing units better. And ideally, we'll talk about the future later on, but ideally, at some point, Cereus Real Estate can also be physically increasing the housing supply with ground up development. So the economic impact of real estate investing is also key for society. So I think I saw a statistic that the real estate industry, everything connected to it, buying and selling, investment, renovation, plumbers, lenders, et cetera, accounts for a staggering portion of the US economy. So when I invest in real estate, I do it with the knowledge that I'm pushing the economy forward. And personal benefits, just in transparency, I think real estate investing is a lovely team sport. I'm a surgeon, Jordan's a surgeon, and that's the best part of my week when I'm in the operating room because you're working with a team for the greater good. And I see real estate very similarly. So uh, it can be a solitary sport just like anything else when you're just in front of your computer analyzing deals. But when it gets down to it, especially in the way that we envision Cereus Real Estate, we're going to be doing this as a team, taking down properties together. And it also extends our ability to continue to invest in real estate alongside everyone else.
Yeah, and I'll throw in, I think, what was so important for us and when it's fun to see this idea come to fruition because for over a year we've been talking about this, and what we just really wanted was the way we invest in real estate, it was very tenant and investor, which in that case is ourselves forward, but we wanted to really do things the right way. We didn't want to cut any corners, and we saw a lot of that happening again in the more so in the up market where a lot of people were getting in, and there were some practices that were not sustainable, and we really kind of held to um our ideals and morals and ethics of what real estate investing should be, and stood by sound principles of analysis and management. And I'll say, I analyze a lot of deals. Daniel is like a huge like resource in terms of that. And then I think a unique perspective that I bring along with, I have to include my wife Selenide whenever talking about this, but is we manage our own properties. And again, the way we've adapted to that and kind of adopted practices is really focused on what's best practice. How do we keep the tenants happy? How do we provide the best experience? We really take pride in providing affordable housing to people who may not otherwise have access to it, just in terms of what's out there in the rental market, and retaining residents and having them be very happy. And so that's everything we want to incorporate into this as well, in just really doing things the right way on both the tenant and the investor side.
Nice. As for where Sirius is going to invest, So we're currently focused on the markets where we invest. So most of my portfolio is in Indiana. Most of Jordan's portfolio is in New York. So that's where we're looking right now. However, this might expand. I think I'm a firm believer that good deals exist everywhere, even in really expensive markets. But by rules of thumb, the places where you get sort of more affordable real estate and with a higher opportunity for cash flow, it typically does tend to be sort of the more interior states in our country, whereas the coastline, the sort of top tier cities tend to be more of an appreciation play. That's the typical scenario. So for now, we're focused a little bit on the sort of interior markets. But team ups are very possible. So the model that we will be instituting with Cereus Real Estate is one where we can take down deals on our own and bring in experienced operators alongside us as necessary, or we can join up with deals that are already in process and just need some help taking it down and could use Cereus Real Estate, and we get to enjoy in a deal that is already sort of close to fruition. So that's all very possible.
And then in terms of a timeline of kind of how we envision it working, um, really our focus at the beginning, and we just kind of launched this on January 1st, is investor relations. And we want to get to know people who are interested in this, learn about their goals, see how it mixes with what we are offering and that everything is a good fit. And, we have been even for, the past 6 months kind of working on asset identification and basically finding properties that we think are good and would make good deals that we would invest in and that we would, want others to invest in with us to enjoy all of the benefits related to it. Um, so we identify that kind of throughout quarter one, quarter two, and obviously this is not going to be rushed where we're like, oh, by the end we definitely need it. We're looking for great deals only. Um, but our goal is kind of set in quarter two to make our first asset purchase. And then throughout the year, the goal we've kind of set and feel that we can expect is about 3 to 5 deals for 2024 to 25. Um, with each deal, Daniel's going to go over next, sort of like the process of investing and you know kind of the end game and stuff like that. But we're in this for the long haul. We love doing this stuff. We've on a personal level been able to enjoy a lot of success, like I said, throughout all different kinds of markets and feel very comfortable navigating all the different markets that do come with real estate. And so we're planning to do this for a long time. We hope to be able to use it to help a lot of doctors achieve financial freedom, and basically be able to enjoy everything that comes with that, including potentially working if you want to. I throw that in just because it's a personal thing of mine. I'm still pretty early on in my career and not at financial freedom yet, but when I reach it, I plan to continue working. But just that idea of being able to do it because I want to, not because I have to, and being nimble if I need to adjust is huge. And I really believe that physicians, if we had a nation of financially free physicians, that we would actually be able to change healthcare for the better because we would be able to take back control of medicine where we've given up a lot of that autonomy and a lot of it because of financial issues. So for me, it's even bigger than just ourselves and even just real estate. I see it as something and a mission that's helping medicine as well. So that's sort of the timeline that we foresee, and I'll let Daniel get into the more specific timeline of each deal.
Amazing. All right. So each deal in a syndication generally follows a standard timeline. And I know some people may on this call may have invested in a syndication before, and some may not even know what it is. But basically, just to put it very simply, a real estate syndication is when various investors will pool capital and a deal can be purchased with all of the capital where there's a general partner kind of operating and controlling and directing the deal, and all of the investors are limited partners. And the way that works to become get the ability to invest in a deal is that you'll be part of the Cereus Real Estate investor list. And many people on this call, probably, if not everyone, have already signed up for that. And using that list, when we have a deal that we love, we'll send out essentially a mailer saying, all right, we've got a deal. Let's set up a webinar. So on a webinar, it'll be very similar to this, and we'll have essentially all the details of the deal ready to display and discuss. And that is where the property is, the property is, how much it is, why we think it's a good deal, what we think the value play is, and what we think the financials of the deal are going to look like. So while we're doing that, uh, we're concurrently going to be performing due diligence of the asset, which means things like a title search and inspections and double checking and triple checking all of the assumptions that we're making about the utilities, the insurance costs, and the real estate taxes. And throughout this process, interested investors will register in an investor portal. So if you are on the investor list and you say, this looks like the deal for me, you'll get an invite to the investor portal. And in that portal, you'll be able to see the deal, get all your information in there, certify that you're an accredited investor, or if you're not accredited, you can let them know as well. And then you'll be able to transfer funds, and then we close on the deal. That generally will take about 2 months at least. After we close on the deal, we'll be able to perform what's called a cost segregation and depreciate the asset on paper that will allow for a passive tax shelter. And that's one of the beauties of real estate investing, where it can offer a significant tax shelter if you fulfill the right criteria. And after that, the property improvement plan goes into effect. So we'll be doing cosmetic renovations. We'll be improving the property management system. We'll be ideally raising rents and increasing the asset value. Um, and then what does it take to get to the finish lines? As quick as 3 years, as long as maybe 7 years, and this is very deal specific. And then what happens at the end of 3 years? Um, so Jordan, do you want to go into a couple of the options that we can
Yeah,
do at
so
this point?
there's kind of a few options, and a lot of this will depend on the deal and market we're in, and I think that's all part of the plan in terms of staying nimble to always do whatever is best. So one option is we return all of the capital to the investors, meaning that all the investors make back their investment and everything like that. We keep the asset, meaning that we don't sell it. And basically the investors stay in the deal and enjoy infinite returns via cash flow. And the way that works, because it sounds kind of like voodoo, is at that point all of your initial capital is returned. So if you invested X number of dollars, then that X number of dollars is back to you, but you're still invested in this deal. We all still own this property. It's cash flowing every month, so every month you get a payment from it, and it's a payment without any capital of your own. So it's like the return on that is whatever it is. Let's say it's $1,000 a month divided by zero. That's infinite. So that is obviously has huge advantages that may or may not be coupled with a refinance. And again, that just depends on how the numbers work and whatever allows for the best return. And then the other option, which is, I don't know if you'd agree with that, Daniel, maybe the more traditional one,
Yeah.
is that you sell the property. That event afterwards, we send your initial capital plus all of the profit to the investors. And so those are really the two sort of exit strategies. Not that the first is necessarily an exit strategy, but it is in the sense that your capital has exited. You have no money at risk anymore, because it's all been returned to you, and you're just getting this cash flow, which again is like an infinite return.
All right. And so if we go the second option, you can use your capital and profit to buy Junior a new Tesla, or you ideally you'll have the opportunity within our investor portal to just roll that capital into the next deal. So the investor portal that we plan on using, you can essentially just pool the capital in there, and ideally we're going to have sort of a rolling opportunity to continue to invest in other deals, and then you can just compound that money indefinitely and just see it skyrocket. That's the optimal goal. All right. And I think that that does it for the formal presentation. And I think we're hoping to maybe take some questions, right?
Yeah, I think hopefully we're successful in our goals of just sort of, um, introducing ourselves for anyone who isn't familiar, and just discussing why we went about doing this. So yeah, we would love to answer any questions, whether that's like specific stuff on real estate, whether it's questions about us or whatever it is. Feel free to let us know. You can either, if you can drop something in the chat, or obviously um, just pop on and let us know.
While you're thinking about your questions, I do want to make sure that even though you're in the webinar, it would be ideal if you can, if you have not already done so, formally join Cereus Real Estate's investor list by going to the link at the bottom of the screen. Or if you're not at a computer, you can just screenshot this and then use that QR code at some point to do that. Any questions? Who's
All
going to
right.
win the football game tonight?
We got Eugene. What is your skin in the game? Will you be
Yeah.
investors as well as syndicators? Investors only, syndicators only? No. Skin in the game. We're buying these properties essentially because we would buy them ourselves. So this is something that we're invested into. We would not go into a deal that we weren't invested in as well.
Yeah. And, I, to be, to be specific, that means we'll be putting our own money into the deal as well.
Yeah.
So I'll unmute myself. Can you hear me okay?
Mm-hmm.
Yes.
Yeah. So I mean, I kind of shied away from the syndicators in the past because they would often have some kind of syndicators themselves would get money regardless of whether investors win or lose, because there are certain fees that they charge. So I'm trying to understand the structure of the Cereus Real Estate that you guys are organizing. Are you going to be just another investor like everybody else, proportional to the amount of money you invest, or will you have some kind of management fees, acquisition fees, loan fees, et cetera, et cetera?
I can kind of go into that. And I think there are, it's important to talk about the general organizational strategy of syndications. And there is essentially the people who are putting the deal together and running it and doing the due diligence and, spending their blood and sweat to get the deal across the finish line are generally the general partners. And there that would be Jordan, myself, as well as other experienced operators that we need to get the deal done. So that might be what's called key principals, who provide essentially liquidity for the banks to allow the deal to get capital to lend on it. So there will be a general partner share as well as a limited partner share. But that doesn't mean that we're not investing capital into it. As as far as fees and things like that, I, you know, each deal will be kind of evaluated on its own merit to see what sort of fees are necessary. But it's incredibly expensive to put a deal together. So part of the initial costs that you'll see, sort of like asset acquisition costs, they're just covering kind of all of the legal fees and due diligence fees and inspections and various things that are necessary to bring a deal to fruition. So, as for other fees, we'll just have to evaluate each deal sort of as it comes.
I had a couple questions myself. There.
Yeah, go for it.
Anyways, what kind of debt ratio? So are you using private placement mechanisms as far as paperwork?
I'm not sure what you mean by private placement. In terms of like debt ratio, do you mean like debt service
Well,
coverage ratios?
no, private placement's a written mechanism for investors. So you don't break the blue sky laws. Are you using accredited investors only?
You mean a private placement memorandum,
Yes.
PPM?
Yep.
Yeah.
Yep.
So yeah, absolutely. I mean, this is everything has to be done by the book. So real estate syndications are there's a carve out where real estate syndicators don't have to register as trading securities, but still it's essentially offering securities. So everything has to be really carefully done. So yes, for each deal, there'll be a private placement memorandum as well as they'll describe all of the risks. Every investor from every state we have to file a blue sky disclosure for that state. So again, that's why the legal fees for every syndication, typically legal fees can be about $20,000 just to kind of generate all the legal mumbo jumbo that you need to close a deal. So that's just an example of why sometimes you'll see those asset acquisition fees, baked into the deal just to cover those costs.
And what kind of debt you're going to put on the property? What are you looking at?
So that's something that I would love to talk about because one of the reasons why I have gravitated towards larger multifamily apartment investing is that we are in still, despite what has happened with the Fed and everything like that, they've paused the interest rate increases, but we're in a really challenging interest rate environment. So if you go and buy a house now, you're still going to be expected to pay like 7% interest rate on a residential property, right? It's usually worse for commercial properties like multifamily apartment buildings. But since it is the goal of the government to provide affordable housing opportunities for its citizens, there are governmental agencies like Fannie Mae and Freddie Mac that offer better interest rates for multifamily purchases and better terms and everything like that. So that is a type of debt that we're likely going to be seeking for the type of assets that we're trying to take down. And it has benefits of better interest rates, better terms, like longer amortization periods. And they keep an eye on the property. They want to make sure that the government's money is being invested well. So there's a lot of checks and balances that come along with it too. So ideally agency debt. That's the answer to that question. Long-winded answer.
I appreciate it. I'm in Detroit. We have a lot of unique properties. Actually, we're going into the container building business of apartment modular.
Oh, excellent.
So,
That'll be exciting. I love container buildings.
Yeah.
Some people really hate them, but I think they're very cool.
In Detroit, there's so many benefits. Bank of America is giving money for. There's so many funds, like you said, for affordable housing right now. It's a great place to be in.
Yeah, there's always special debt available for affordable housing. It does kind of make some uh, there are programs obviously like Jordan has been familiar with Section 8. That's a type of affordable housing voucher. So there are some uh, regulations about that in terms of lending as well. So, but there's a lot of money out there available for it if you're going to be increasing the affordable housing supply.
Well, definitely, we want to thank all of you for taking your time and being here with us. We'll certainly be in touch. If you have any specific questions, you can reach Daniel or I at Jordan or Daniel at cereusrealestate.com. But don't hesitate to reach out with any questions or thoughts or things that you're looking for that could be better.
Perfect. Thank you so much, everyone. Really appreciate it.
Thanks, everyone.